Good evening. You're watching Markets Tomorrow right here on ET Now. I'm Ajay Sharma.
Good evening, everyone. I'm Avan Dabash, and of course, it was a stellar day of trade. So we'll get in our top experts to analyze what the markets are likely to bring forward come tomorrow. Sanjay Dutt, Director Quantum Securities, will be joining in. We've got Mitesh Thakkar, technical analyst on miteshthakkar.com, and Dipan Mehta, member BSc NSE, joining in.
Well, it was definitely raining gains on Dalal Street, and quite literally it was a day of heavy rains in Mumbai. But new highs were scaled on the benchmark indices today. Not only that, follow-up buying also come by, and the market ended at sessions high. Well, today's up move was almost for a third day, and the market breadth was quite strong, clearly indicating that participation was not only in the large caps, but even the mid and the broader markets were equally active. Traders are citing this big up move in the market to a pre-budget rally. Now that we are making this kind of a move almost for a third straight day, volumes are also rising. And not only that, what really happened in the macro front also, which aided the rally, was the rupee strengthening in trade, almost rising to over 2-week high levels. Bond yields also weakened today to about a week lows. That supported the financials end of the market, but clearly one can say the first hour of trade was clearly the up move was led by large cap stock. Then of course it percolated into the wider markets. If we talk of the big movers in trade today, metal was particularly active, led by Coal India. Yesterday of course Hindalco was very active. Sterlite also ran up in today's session after a big broker upgrade. Follow-up buying was seen in some of the auto stocks like Maruti, M&M. Well, there's an entire reform-hopeful trade which is happening in the market past couple of days. The power-related sectors, NTPC, L&T from the cap goods, some power financiers, and then, of course, the entire Adani Group stock also came back in fashion. But the list is very long. Clearly, higher levels being cited. The open interest of the Nifty also increased today smartly. In fact, call options around 8,000 are active. So there's definitely a large pocket of the market which is eyeing those levels in the near term.
Yeah, and when it comes to the broader markets, of course, today it was all about the large caps. But let's just touch upon what happened here, because it was a steady day of trade nonetheless. You did have a good, rally coming about for the broader markets. In fact, the advanced decline ratio continued to remain healthy. It was the CNX mid-cap index which hit record highs in intraday trades, ending close to the day's high, a notch up of close to 1.5%. You had the Nifty Junior also should pull up that chart for you, because it hit a fresh record high in trade today. And of course, lots of stocks from individual sectors stood out. Just going to highlight a few of them. Emphasis reports suggesting that HP has revived the plan to sell stake in the company, and that the US software giant has roped in UBS for the stake sale, on account of which it rallied very smartly. A 7% notch up in intraday trades, petered off by the day's close. IVRCL Infra reports suggest that the CDR cell has got a nod for 7,000 crore rupee debt recast, and I've got a fresh loan as 175 crores post the debt recast, and will get 1,400 crores of a fresh bank guarantee. Meantime, take a look at an X side. It was price action coupled with volume activity. Barclays has maintained overweight. They've raised the target to 177, saying that the automotive batteries are at a cyclical bottom, and that the overall industrial demand has improved. So all in all, it was pretty strong for the equity markets in trades today. So let's take it across then to our experts. And Dipan, would like to start off with you. Looks like the pre-budget rally is on in full euphoria. Do you think that the kind of movement that we're seeing is a little bit unjustified or unwarranted, given that it's too early to expect so much from the new government?
Yeah, of course, I think that it is a bit early to expect something from the new government, but so far all the statements and steps have been pretty well received by the market, and I just don't think that it's not just the pre-budget which is creating this kind of euphoria. Also, it's the fact that oil prices seem to have declined, and the threat from there definitely has receded. At the same time, the monsoons also have picked up, so that particular issue also, which had been troubling the markets over the past week or so, or rather for the past almost month or so, there is some ray of hope over there as well. So we are in a situation where the bull market, which started a few months ago and got a lot of fuel with the election results and the swearing-in ceremony thereafter, the first speed breakers came in the form of a spike in oil prices and a poor monsoon. And even on those two fronts, some relief is coming through. which means that the bulls are getting a bit more emboldened and they maybe want to increase exposure to equities. Of course, all bets are off once the budget is out and what the proposals are, and the markets could go either ways after that. But right now I think yes, partly pre-budget, partly also the fact that some of the threats to the market seem to be resolving themselves.
Nitesh, how would you take stock of the situation, especially on the Nifty, on the charts, now that we have added over 200 points in the last 3 days alone? Should one really be eager to book profits right now if one is riding the Nifty longs, or one should trail the stop loss in your view?
I would suggest trailing the stop loss. I think, see, very clearly what has happened is that after about 2.5-3 weeks of consolidation in the June, in the month of June, I think we have broken into fresh highs. Also the fact that this breakout happened with a gap up opening, and then during the day the market continued to move up. In this kind of scenario, I think the gap itself becomes a big support. I think the earlier breakout level of 76.80 becomes a big support. So I think this 30-point range of 7680, 7650 now is very critical in terms of technical importance. As long as that is not being broken, I think the idea should be to remain or hold on to your long positions, just trail your stop loss to around 7650 levels. What could happen in the meanwhile is that if the bank Nifty starts giving a breakout, and the bank Nifty has had a very similar movement to the Nifty, which is basically about 2.5-3 weeks of consolidation. If the bank Nifty records a closing about 15,600, then I think that could gain momentum and lend the same to the Nifty itself. So I think, in this kind of scenario, I think holding on to long positions might be a good strategy. In any case, in case the trade fails, the stop loss is only about 1% on the Nifty. So I think that will not hurt much.
Sanjay, what about you? It looks like the markets have rediscovered their momentum. It's turning out to be a very good week of trade.
I think it's some sort of a pre-budget rally that's panning out. In addition to that, the global markets are in a sweet spot right now. People aren't that concerned about what's been happening in Iraq. That's in the prices more or less. I think it's more so because U.S. dependency on oil from the Middle East has gone down substantially, or in fact, U.S. is going to turn into a exporter soon. I think a combination of these factors have been positive for the global markets, and in addition to the expectations here in India from the new government, a combination of these factors are playing out positively for the indices here.
Deepan, the auto and auto ancillary end of the pocket is quite active. In fact, the auto numbers have been slightly on the higher side than estimated, but autos have run up in terms of valuations. From the auto ancillary pack, which are the names which you have on your radar, which may be good quality companies, but may not have run up in the same way, the way OEMs have run up?
Is that question for me?
Yeah, Deepan. That one for you.
You're talking about auto ancillaries. Yeah, that's right. Yeah. See, I don't think investors should make a distinction between OEMs and non-OEMs. On the whole, what we are seeing is that auto ancillary business, the ones which are performed, that is Bharat Forge, Motherson Sumi and Amtech, Auto Amtech India, they are benefiting from an overall trend in the global auto industry. And I think the last 2-3 years have been fantastic for the global auto industry across geographies, be it Europe, US or even China for that matter. And a lot of the large Indian auto ancillary companies are globalized companies. They have plants overseas or export. A large portion of their operations come from exports. So they are benefiting from this particular trend which is taking place. And it does appear that with the global economy kind of improving, this particular trend may sustain for a year or two more, and that should continue to benefit local auto ancillary companies. At the same time, I think domestic auto industry also seems to be improving, so that could act as a further boost to these companies. So I would say that for the next 2-3 years or so, these are exciting times for the auto ancillary companies we just spoke about. Usual disclosure that we have investments and recommendations in each of these. So my sense is that they are in a unique position where they benefit from the exports and the global boom in the global auto industry, and there's a good opportunity domestically also because we are seeing a turnaround in the production and sales numbers over here as well. So it would mean better capacity utilization, better operating leverages, and even better performance for the next 2-3 years or so. So yes, positive on the auto ancillary industry.
Let's put the spotlight on the entire metal pack. Well, the up move was simmering for past couple of days. Yesterday there was a big blowout in Hindalco, but today also we saw some broker notes coming in on some of the stocks as Sterlite for one stole the show in today's session. Coal India was another one. Mitesh, out of these large cap metal counters, which not only are gaining in trade but good volume action ending at session high, which are the stronger ones on the charts as per you?
See, I think, in the metals pack, I do like the entire sector per se from a trading point of view. But I think the strongest would be Hindustan Zinc, which made a fresh high. Sterlite, I think, also continues to show momentum, though both of them are pretty much linked to each other. I think, the one which could be interesting to watch could be Jindal Steel and Power. That's a stock which has done a lot of consolidation in this range of about 340 to 315. So break about 340 could really trigger some kind of strong upwards there.
Yeah, clearly it was the metals pack which was in focus today. But Sanjay, let's get in your views on the PSU banking lot, because you've been very bullish here, especially mid-tier PSU banks. But, factors like the poor monsoon, sticky inflation, even appreciation in bond yields would perhaps challenge your thesis.
Maybe in the next 3-4 months, but I see if the economy picks up and the government's focus moves on growth, particularly what I sense is that over the next few months the government is going to aggressively focus on creating jobs, and that too in the SME space, and is going to really address issues that concern the SME sector. And that's one area where I think that tier 2 PSU banks are way ahead of the private banks. So in my opinion that even though next 2 to 3 months may be a little challenging because of monsoon, etc., but I think our call on PSU banks remain. You may in fact actually get an opportunity to buy them cheaper if what you say and what we all think is going to pan out in terms of bad monsoon, inflation and bond yield, etc. I think those could be opportunities to buy in, because the story is big there. The rally is not going to really die out that soon in the banking space. So good quality PSU banks, the ones still trading around 1 times book or less than that even, with relatively clean balance sheet, low NPAs, are the place to be in our opinion.
Deepan, out of the entire reform hopeful pack, which is partly capital goods, power for sure, both PSU as well as the private pack, Adani Group was active, NTPC, CESC has been active. Which are the ones which you are comfortable with to be played as a positional bet between now and, say, the budget?
So I'd go with the PSUs and not specifically any industry per se, because in my experience, whenever reforms are announced, that first knee-jerk reaction comes through, but the eventual benefit takes maybe a few years to actually, water down or flow down to the operations in terms of top line, bottom line. But with PSUs, there is a slightly bigger opportunity there. For one, intrinsically, these are strong companies. They've got monopolistic position, and clearly they benefit from improvement in the economic trends. On top of that, if the new government is trying to put in more autonomy, make them more accountable, remove political interference from there, and kind of unleash the vibrancy which is there inherent in the PSUs, then I think that these companies could come out with very good performance in the immediate short term as well. Base effect also benefits these companies, as also the fact that even marginal improvements in terms of productivity, be it in yields or be it in selling prices or in terms of managing their costs, could result in very huge increases in the net profit. And even as of these levels, I don't think the PSUs are trading at a very high price earning multiple or price to book for that matter. So when you talk about reforms, I think it's a very grey area and difficult to pinpoint exactly what specific reforms will actually take place and how they'll get implemented and how it will benefit the industry of specific companies. But when it comes to PSUs, I think there are very specific measures which could make a difference in the short term. So just on reforms, I think the best way to play is the PSU stocks.
Sanjay, do you think it's, this time around we won't get a big result surprise from the large cap IT companies on account of the currency?
No, I think, TCS, HCL Tech will continue to show good numbers. What I'm hearing is that both the companies have done well this quarter and have continued to, maintain the momentum and growth that they've had in the last few quarters. We don't expect much from Infosys because obviously the new management just taken over. There would be challenges. But at the same time, expectations have gone down substantially as far as Infosys numbers are concerned. So therefore, even if marginal improvement over what is expected would be taken as positive, the stock has underperformed the sector over the last few months. So therefore, there could be some positive surprises as far as the price action is concerned around the results. But I think that's going to be short-lived as far as Infosys is concerned. But the other companies will continue to maintain their momentum because I don't see, TCS, HCL Tech coming out with bad numbers as such.
In fact, rupee, that was a big mover in trade today. IT stocks, of course, were active on the back of that, but rupee-sensitive stocks were also very active. Some of them were private sector banks like Yes Bank, IndusInd Bank. Select auto ancillary and oil and gas stocks were very active. Mitesh, on the charts, out of ONGC, HPCL, or even IndusInd, though they may be from different sectors but are reacting to rupee, how are the charts looking in your view?
See, I think, HPCL appears to have completed some kind of a pullback, so I think that's settling down nicely. My sense is that it might consolidate before it starts moving up again. You can see some kind of base building happening around the 390-380 mark, and I think it can go up to about levels of 445, 450 on the upside. So I think this could be more of a range trade. Every time you get it around 400 or below, I think one can explore some kind of buying opportunities. ONGC, after the kind of negative news on the gas price deferment came, I think it's trying to fill the gap up which was there. If it starts capturing 435, I would possibly mark it for another attempt to get past 455, 460 on the upside. The structure remains positive despite the negative gap, but I think this is one of the stronger stocks, and above 435 can regain the momentum which it had lost, get past the highs of 460, 465.
As promised, we're highlighting some of the top stocks to keep on your radar. First up, what are the dealing rooms chatting about? We've got Yatin joining in from our research team. Yatin.
Well, Aman, JP Associates is something that dealers are talking about. They have, initiated some small short positions in the counter, especially after the run-up that we have seen in high beta and infrastructure names. The market buzz is that JP Associates might come out with a large QIP, and hence, they are looking at